This week, we are talking livestock slaughter and cattle on feed numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Tennessee's Charley Martinez. Good afternoon, Charley.
Good afternoon. How's it going?
We're on the 971st day of winter, I think, and for our part of the country, it's a little wild to be talking about sub-zero temperatures and snowstorms.
I'm in that boat. We're not sub-zero, but for me, it might as well be sub-zero.
Well, we're going to talk a little bit about weather coming up and just how it's kind of playing a role in what's been going on. We're going to talk livestock slaughter numbers. We'll take a look at that cattle on feed report. But first, let's recap what happened this week in the markets.
Yeah. So Megan, as we close the week, live cattle prices closed at 203, which was down from 209 that we saw the previous week. February live cattle prices were at $1.90 or $1.97 per pound, or 197.70 cents, which is down 3 cents compared to a week ago. And then as we start rolling the calendar, we start looking at different futures markets for the feeder calf segment. And so March feeder cattle futures were down 77 cents compared to a week ago, and they're currently sitting at 267 and some change. Choice box beef was at $310 at the end of the week, or $310.77, pardon that, which is down 1.2% compared to a week ago, which was at $314.70. And then as we get into the pork side of things, the pork cutout was down to $98.14, which is down 4% from the previous week. So we saw a massive, another week of dropping, but also this previous week was a pretty big drop. National Base Hog Carcass was up, actually, though, to $86.49, which is just marginally higher. I say higher, but it's only 0.46% higher. So relatively unchanged compared to last week. And then, again, as we start changing the calendar, we'll get into the April lean hog futures. And so they closed at $87.67, which was down compared to a week ago, down actually $4.93, or down 5.62%. So again, we started to see some incremental swings or larger swings as we start looking at the futures boards.
Can you talk a little bit about seasonality in markets? What are some things that might be driving what's happening right now on the cash and the future side of things as we look at both cattle and hogs?
Yeah, so we all know that throughout the year there's good times and bad times in terms of when prices are going to go up, prices are going to go down. So if we're thinking about grilling season, we know we're still a few weeks out before we really start seeing strong demand for that, which would increase some prices probably. But then as we start thinking about where we are right now, we're kind of in this weird holding pattern where we're coming off the holiday season. We're not quite yet into the flow of Easter season and then going into the grilling season. And so right now, demand is probably more steady to lower, depending upon which protein market or what segment inside the protein market you're looking at. And so I think that's why we're starting to see some of the prices come down. But as we'll discuss a little bit later on, one of the other reasons why we see prices kind of, trending down or holding steady to lower is partly due to the supply side. We've mentioned, the past couple of weeks that we saw a lot of animals in the feed yards from the cattle and feed reports. And so we're expected to have increased production. So if we have supply go up, price is going to go down as well. So we kind of have this weird influx of demand seasonality occurring right now, but also a supply influx that is occurring at the same time. So that's probably why we're seeing some of these larger swings than we typically would see, but it's still kind of expected to a certain extent, and prices, quite frankly, are still pretty good compared to the last couple of years.
All right, let's talk a little weekly slaughter numbers. Those have kind of pulled back some right now on both the cattle and the hog side of things. Let's run through some of those numbers.
Yeah, so at the end of the week, cattle slaughter was at 554,000 head, which was down 7,000 head compared to last week. And then in total, down 34,850 compared to a year ago. Hog slaughter was at 2.5 million head, which was down 26,000 from last week and down 24,000 compared to a year ago.
Do we see some of that seasonally as well, right? Some ebb and flow in what's going on in terms of slaughter pace, and how does weather factor into that the last couple of weeks?
Yeah, so, as we're, joking about it on the front end, when we naturally will have these seasonality issues occurring just from a supply and demand standpoint. But we also know that if weather it has a stranglehold on certain regions, especially where we have packing plants and where we have supply of hogs and cattle in this instance, trucks can't get on the road to move animal quick enough from the feed jar to the packing plant. And so if we start sprinkling some of that, we might see some pickup on Saturday slaughters, for instance, here in the next, probably tomorrow, and then moving into next week. And as we get into areas where people are snowed in, that we're just going to see a natural decrease in supply. I'll be interested to see next week on Saturday slaughter for tomorrow and for next week projections in terms of what we could expect to offset some of the lag effect that we saw this week. And then as we sprinkle in even this year, we've had a couple of, large snowstorms that could have slowed down processing from, a regional standpoint as well.
All right, two big reports out this week. Livestock slaughter out first. Let's take a look at that. And as you take a look at those numbers.
Yeah, so, I made the comment earlier that as we look at prices, there's a supply component to it. If we look at total red meat production for the U.S., it was at 4.89 billion pounds in January, which was up 2% from 4.77 billion pounds in January of last year. So just from a year-to-year change, we've seen a lot more supply hit the market. And so that's part of the reasons why I was mentioning earlier about some of the price responses that we would see. But as we dig into that report, I always like looking at it for the pork and beef production side of things, because we know those are two of the massive components to what we see in red meat production. On the beef side of things, production was at 2.37 billion pounds in January, which was actually 4% higher than January of last year. And then if we look at the total slaughter, I just mentioned that we had some pullback on the week-to-week change. Cattle slaughter totaled 2.72 million head in January, which was down 1% compared to last year. And so if we take that just in totality, we've produced more with fewer head. And that's where the last component of that report that was really interesting to me was that the average live weight was 1,439 pounds, which was actually 50 pounds higher than last year. So we're doing, quote unquote, more with less. In terms of fewer numbers that we're slaughtering, but we're actually slaughtering at heavier weights. And so that's how we're offsetting some of the total head loss, but that's how we're gaining so much more in production. If we look at pork production, we were at 2.5 billion pounds, which was also 1% higher than last year in January. Hog slaughter totaled 11.5 million head, which was also higher than 1% higher than January of 2024. And then the average live weight was a similar story. Average live weight in January was 293 pounds, which was 1 pound higher than January of last year. So in both segments of these protein markets, we're seeing fewer. In the cattle side, we're seeing fewer head, but just massive changes in terms of the slaughter weights. And then on the pork side of things, we're starting to see more head at higher weights. And so when we start seeing like the cash prices taking some of these swings, that's going to be a function of that increased supply that's hitting the market. And then, we'll discuss a little bit cattle on feed report, kind of what we expect there. But as of where we currently stand, that's one of the bigger reasons why we're starting to see some of the movement in prices.
One of the things we talk about a lot is that beef cow slaughter number, and how maybe is it starting to show some indication that we're not maybe we've slowed down on liquidation, or we're looking for elements to show growth. As you take a look at that report, knowing what we saw in the inventory numbers as well, are you starting to maybe be optimistic that we're going to grow in the cattle herd, or are we still kind of in this no man's land?
I'm going to be a true economist and say, well, I'm kind of in the middle of both. I do hear the part, and I do understand why people might say, well, we're slaughtering fewer, cows on the slaughter cow side of things. But we also have to remember that over the last couple of years, we've done a pretty good job in terms of digging deep in, culling out a lot of cows. And so if we go from a year to year trend, sometimes we just get to a point where there's just not as many cows to pull out and to slaughter, right? So somebody that usually is culling at 3% or 4% or whatever number they want to pick, they've done that over multiple years already, and they might sit there and say, well, yeah, the slaughter cow market is good, but also at the same time, I might want to keep this cow because the calf that it's going to produce is worth $1,500 to me in the next year, which is pretty good prices, and they have no reason to cull that animal. So, I think there might be, depending upon where you are in the country, I think there is some of that rebuilding, indications of rebuilding occurring. I think there's also a part where we're also just going to see total numbers of slaughter go down on the cow side of things, just because we have fewer animals. If we think about, rebuilding, there's also the component of the heifer retention, and we'll get into a little bit more on the cattle and feed report, but the percent of heifers in the feed yard is an indicator as well. And so for me, I still sit there and say, well, I think depending upon where you are in the country, there might be some, hey, we're starting to look, we can look at some rebuilding. We can look at possibly not liquidating anymore. And I think there's some opportunity out there for folks that have gotten rain, that have gotten some moisture, that are sitting there saying, hey, maybe this is a chance for us to start rebuilding. I'm still going to be cautiously optimistic in terms of rebuilding or slowing down the liquidation. I think we need a couple more months of data in order to make that decision or make that call, just because we also only get that report, the January 1 report once a year now. So we kind of have to put pieces from different puzzles into that picture in order for us to make a hard call. And I think as we get further, maybe 2 to 3 months down, we can see cow slaughter, heifer, or percent of heifers in the feed yards. And then as we start to think about our marketings in those cattle and feed reports, that will kind of give us an indication, as well as the placements in those reports. So it's a long-winded way of saying I'm somewhere in the middle.
I think everybody's somewhere in the middle right now, right? And then, you were at cattle, the cattle NCBA's meeting as well, and listening to the forecast from Meghan's with Cattle Facts talking about another La Nina, which doesn't bode well for a lot of the cow calf and cattle parts of the country in terms of grass and being able to rebuild supplies.
Yeah. So as I mentioned, it's like, moisture in the ground. Can you have some ability to expand or to maybe not even just liquidate, but just hold steady, right? Like there's 3 different options. You can liquidate, hold where you are, or you can expand your herd, right? I think when we talk about seasonal patterns, we know that's historically that is a very good indicator in terms of what we can expect. I also think some of what, part of the function on the production side and the farm management side is how, your input costs, your hay availability, your storage of your stocks that you have on hand. And I think if you're on the East Coast, we were already kind of heading into an environment where we were getting low on stocks, kind of had to reach into into the hay inventory pretty early this past winter. So are we going to be able to rebuild those in order to then even think about rebuilding, or, if we're still going to be in a holding pattern or liquidating pattern? And then I think if you look more towards the Midwest and in the heart of the cow-calf country, that's where we look at reports of weather patterns, and we might be in a not necessarily let's go all in, but more of a let's just see what happens in terms of the weather patterns. Personally, I think that's also a big regional component to it too. If you're on the coast, any part of the coast, that's always a different environment when we see those types of La Nina versus El Nino seasonality patterns. And then also anything that's leading up prior to that year is also a big, component in terms of your inventory, especially when it comes to hay.
All right, cattle and feed numbers out this afternoon, Charley. As you take a look at the numbers for January, what sticks out to you in this month's report?
So the first thing was knowing that we were slaughtering in terms of number of head, we were actually down compared to a year ago. I was just wanting to compare where we were for total number on feed, and then just kind of looking at our placements and our marketing. So For January, we were at 11.7 million head, which was pretty much on par for what we saw from the previous report. But when you compare it to a year ago, that's approximately down 1%. And so, that's just going to be a natural function of fewer animals or fewer cows. We're going to see fewer animals on feed. One of the things that, though, is interesting to me is it's especially getting, coming off the conversation we just had in terms of rebuilding or not. Placements were at 1.82 million head, which was 1.73% higher than February of last year, or January of last year. And then, or February 1 of last year, pardon me. And then marketings were 1.86 million head, which was also higher at 1.41% compared to a year ago. And so when I think about where we are pretty much holding pattern in terms of cattle on feed month over month difference. But then when we compare how many more placements are we putting in, we're at 1.73% higher. So somewhere along the lines, people are indicating that they're actually going to be putting more into the feed yard than they did a year ago, even though we have fewer animals. And so if we think about in totality, we have fewer animals in terms of a cow base, but we still put more animals into the feed yard. If we think about the marketings, we're pulling out more than we're putting in. So we'll see some type of decrease probably in the next report in terms of cattle on feed. But we're still marketing more than we were last year in terms of, that year over year change. I think the biggest component to me, though, is still thinking about that being 1.73% higher compared to a year ago, even though we don't really have as many animals in the yard currently, or in the yards currently, that were coming by way of Mexico. And we've seen an increase in terms of the feeder cattle coming in from Canada, but relatively speaking, though, that's a small number compared to historically what we brought in from Mexico. And so I think that's going to be something to kind of watch here in the future in terms of, if we see a large increase in terms of placements, is that a function truly of cattle that were coming out of the U.S. cow herd, or is that going to be a function of bringing in imports, live cattle imports, or live feeder cattle imports from Mexico in the coming weeks? We just now started seeing some movement last week. So from that standpoint, it's going to be more of, if we get to next month's report, our placements trending higher by a large amount. Is that because animals are coming in from our bordering nations and hitting the feed, or is that going to be more of a function of the U.S. cow herd producing those feeder calves that we're seeing in the feed yard? So I think next month's report is going to be the one, and especially when we get to the quarterly reports, that's going to be some of the real telling stuff, not only to understand the impact of New World screwworm and when we shut down the border, but also to your question earlier, are we liquidating still? Are we in a holding pattern, or are we thinking about rebuilding? I think that's when we can really get some clarity on those types of questions.
And just of note, for those who may not know, we're not the borders haven't reopened, and we're not importing at full steam. I think it's 500 a day.
Yeah.
And they have to go into holding patterns. They still haven't had any cattle come into Texas yet, last I read. So this isn't going to be a flood in the market. It's a very slow and steady element, and you've got animal health requirements that have to be met. And if they're not, they're turned away. I mean, it's a whole process.
Yeah, like saying the sentence, we bring in animals, or we're importing animals from another country, is not as simple as it sounds in that sentence, right? I commend you for bringing and making sure that that's clear. I think I mentioned the last time we were together a couple of weeks ago that there was talks about not sending, the feeders in Mexico were saying, hey, we're putting money into these animals, we're going to go ahead and keep them here in Mexico. I think the slow kind of, for lack of a better term, the slow burn-in of these animals coming back in is going to be a function of what you were talking about in terms of the protocol that they have to go through. But also, how much supply is Mexican, or the Mexican feeders willing to let go, or the Mexican producers willing to let go at a certain price, given that they're going to have to, incur all these extra costs of the quarantine and the protocols and everything else. I think it makes for a really neat question that we haven't seen in a long time, from a live animal import situation, that I think is going to be something that would be pretty neat to look back on in a couple of months and see, what kind of impact it really had.
Charlie, that's the most economist statement I think I've heard in a long time.
My research brain right here was like, can't wait for more data.
I understand that element of it. Really, that's all we have for this week. I know it's a couple of pretty big reports. As you look ahead, what are some things you're watching in the next couple of weeks before we chat next?
I think for me, we talked about earlier about like the weather and kind of the impacts for us, and in the region, across the regions. I'm kind of watching just local auctions to see what impacts we're going to see from these things. Whether you're in Kentucky, Tennessee, anywhere that got a lot of that snow, kind of on that fringe of the Midwest area, I'm going to be interested to see kind of what happens from that standpoint. And then as we get into our regular programming of USDA reports, I'll be interested to see what Josh and Kenny have to say, because they're going to have a little bit more information that I currently don't have right now, and I think it'll be kind of interesting to see what they think as well.
And we check in with Missouri and to see what's going on sale barn wise. And Tony at the Missouri Department of Agriculture said they're only going to have about 6,000 cattle move for the entire week, which is, so looking at this weather impact, it's widespread.
Yeah.
And there just have been a whole lot of sale barns this last week that have been dark because of trying to navigate this.
Yeah, and I mean, that's what we were talking about earlier. I mean, the seasonal, there is that saying like the farmer's doors or the farmer's hours never close. Like they're working 365. While that is true, we do know that weather impacts other parts of the supply chain, and it's one of those things that unless you're at the mercy of an auction not happening or a sale not happening because of weather, it's something you probably don't really think about sometimes. And it's one of those things that, as I guess nuanced as it sounds, it's one of those things where I kind of just really want to watch what animals are going to market, whether you're in Missouri on that fringe of where the storm really started hitting, and then across the west or the east way, the east movement that it had. I think it's gonna be kind of interesting just to see what happens, because we haven't had one of those in a little bit, in terms of just a massive snowstorm or ice storm that really disrupted large parts of the country in the cattle industry, and it'd be kind of interesting.
We will catch up with you in a couple of weeks.
Awesome. Good talking with you, Meghan.
Always nice to see you. Dover Weekly Livestock Market Update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.